All right, ladies and gentlemen, it is Sunday. Tomorrow is Monday. We start trading for the broad markets as well as obviously SoFi stocks. So we need to talk about what is ahead. What are the major catalysts? Because there is no shortage of big catalysts this week, and we got to talk about it. So hit the like button and subscribe to the channel. Help get this channel to 1,000 subscribers. I do love and appreciate every single one of you guys for watching these videos, and get yourself those free stocks with Moomoo. When you sign up, deposit $1, you will get 3 free stocks as well as an additional free share of NEO upon your $1 deposit clearing. But let's not waste time. Let's get into this video. So SoFi stock on Friday was down 1.27% in regular trading, down 0.43% in after hours trading. Now we have this one big positive catalyst that might come this week. It might come in the next couple of weeks, but it's the Ukraine war ending and a possible peace settlement coming to the table, and obviously being signed by Russia and Ukraine. And it says peace talks far enough for direct talks between Zelensky and Putin, negotiator says. So we'll see exactly when that does come out. I don't think it'll be this week. I don't think it'll be next week, but it will be sometime here in the next month or two, in my personal opinion. Now, it would be a pleasant surprise if it happens this week or next week. I don't really expect it, but as these negotiations become more real, and once you see actual steps in the right direction, the markets will start to price in an end to the conflict, and you will see the markets react very favorably to that. Because if you guys watch this channel, you know the only thing the markets hate more than bad news is uncertainty, and this is the biggest form of uncertainty. When you're talking about one miscalculation and World War III or nuclear warfare, right? The market's not going to like that. Not going to like that at all. And that's what we've been put under as investors in the market, is really that that fear, that uncertainty about what could happen, meaning stocks have went down quite substantially in this time frame. We've recovered a little bit, but we're still down a lot. So that's the biggest form of good news that I can actually give you guys. As far as the potential catalyst for this week, which they're going to be big catalysts, it's going to be this main one right here that does come out on Wednesday, and that is, let's see right here, the Fed minutes. Is it on Wednesday? Yeah, right here, Fomc Fed Minute. So this is basically a readout of the last meeting on the Fed board. Fed Jerome Powell, all the Fed voting members, they talk, and we get the readout from that. So we might get more clarity on what they're expecting to do at the next meeting. You might get more details on how they plan to sell their balance sheet or run off their balance sheet, which is going to be the main key and driver of volatility in the markets and potentially fear. And we'll talk about that in 1 second. But on Wednesday, that does come out. On Thursday, you have a lot of Fed speakers that come out. So maybe they try to hammer home that hawkish verbiage and really get the markets to price in exactly what they're going to do as far as the balance sheet is concerned. Because the only thing that really matters when it comes down to the broad markets and how they react is going to be the balance sheet here in the near term future. But you do have Fed Bullard that speaks. Fed Williams that speaks, twice he actually speaks, and Fed Bostic that speaks, Fed Evans that speaks. So you have 4 Fed speakers on Thursday, right after the Fed minutes, and it just doesn't look like a good line of catalyst right there. So we'll see exactly what does happen with that one. But why the balance sheet is so important is because you actually had Fed Williams that came out and said, hey, guys, we might have to get rid of the balance sheet in a very aggressive way. He was saying they might start selling assets by next month. Let's see exactly where did he say this. Right here, New York Fed Chair Williams says Ukraine war could aggregate inflation. Says inflation at 6.5% is currently the central bank's greatest challenge, Williams said. He said it could be driven higher by factors including the pandemic, war in Ukraine, and labor and supply shortages. Uncertainty about the economic outlook remains extraordinarily high, and risks to inflation outlook are particularly acute, Williams said. Still, Williams expects rates increases and balance sheet reduction should help bring inflation to about 4% this year. And where does he say that? Yeah, he says the Federal Reserve could start trimming its balance sheet as soon as next month. And he said that on Saturday. So I really want to see how futures open up later today. If you do see the futures down a lot, it's going to be because of what Fed Williams said. Reducing the balance sheet by next month, not something that is necessarily good for the markets. Why? Because we don't know what to expect. It's almost as much uncertainty as Russia invading Ukraine and threatening the world with nukes. Why is that? Because look, the balance sheet back pre-08, before shit really hit the fan, was about $800 billion. Now it's sitting at about $9 trillion. Well, the balance sheet has never really meaningfully come down in a substantial way besides what did I do? Right here. Right? It went from about $4.5 trillion all the way down to about $3.7 trillion. So reduce the balance sheet by roughly $800 billion. This was 2018 and 2019. What happened to the markets during this time? Well, it wasn't pretty. Let's say that. It was not pretty at all. It was this. It was really a very turbulent year. The end of 2018, the beginning of 2019, where the markets did fall a lot. In here, up, down, up, down, up, down, and then you get that one major crash, and there was a lot of fear that was involved in this move, going from about 280 at the peak before, and just 2 months later, we're sitting at 222. So it was a crash of over 25% due to the Fed getting rid of the assets on their balance sheet. So that's the only reference that we really have to go off of as far as the Fed reducing its balance sheet was a major crash. So it's not going to be good for the markets. In my personal opinion, the markets will probably be pretty choppy next week because of the FOMC minutes that are coming out, as well as Fed Williams' statements here. They're probably going to reiterate that they're going to run off the balance sheet by next month or even start to sell assets. And that's no bueno for markets. Think of balance sheet reduction, not good. Not a positive, no matter which way you try to put it. Now, as far as the option activity for SoFi stock on Friday, it's saying 0% positive order value, only $22,500 worth of options that were actually made on SoFi stock. So not a big day as far as options. It was only the first day of Q2 on Friday as well. So you really haven't seen a lot of that positioning actually sink in. But I think it will, and I think SoFi stock will benefit from that. Some of that money on the sidelines heading into the stock, I think that's going to happen. Now, the current short interest of free float is 16.53%. Current shares that are sold short of 117.12 million. Cost to borrow max of 4.33%. Utilization of 100%, and the days cover at 2.72. We're certainly not going to sit here and talk about a short squeeze, but when it does happen, when shorts do get forced out of their positions by the economic outlook changing, whether that is next month or next year, sometime in the next year it will happen, you're going to see a violent eruption in SoFi's share price. So anything under $10 per share, I'm really jumping to buy as many shares as possible. Now, as far as the max pain for this upcoming Friday, that is going to be $9.50 per share, which is still a little bit of a gain from where we are currently at. So again, we'll see if that does happen. My expectations, it really all comes down to the Fed. The Fed is the key for this week. There's not really any other economic data that is coming out that could really move the markets or could compete with the FOMC minutes or the Fed speakers as far as potential headlines and catalysts here. So you do also have Thursday, the where is it? Initial jobless claims as well. And if those come in good, that's also going to be another reason to lift off and start reducing the balance sheet, as well as continue raising rates. And as far as the probability for a 0.5% rate hike, this might come into more focus this week. That's sitting at 69.4%. Markets have not been paying attention to this, likely because there is still over a month until May 4th and until the Fed actually does raise rates again. So just keep that in mind. This is something that will cause more fear here in the next month before the next meeting, but I don't know if it'll be this week, next week, or the week after that. Nonetheless, let's talk about the technicals and then let's wrap up this video. Again, pretty much the same story here. We need to break out above $10 per share. That could happen this week if the Fed does not shock us, or we could continue to trade sideways. It could be choppy like this. Come up to 10, come back down to 9, go back up to 10, come down to 9. But the fact we are not sinking back down to these lows, $7.74 per share, down to these levels, definitely a good thing. We break out above 10. Next stop is $10.82 per share. That is the 50-day moving average. That's where you might see some resistance. But after that, you're clear to head back to about $13, $14 per share. And that was our support level for a very long time. So I do think once you get the sentiment for SoFi stock for the Fed rate increases or running up the balance sheet, once that really starts to normalize and people become more comfortable with that, I think you will see SoFi stock come back up to that $14 support that we were seeing for so long. So that is really all that. The RSI is at 44.91, under that neutral level at 50. So we're still on the oversold side of things, whereas the MACD is bullish at the same time. So that is going to be all for this video. Hit the like button, subscribe to the channel if you guys are new here. Get this channel to 1,000 subscribers. Thank you guys for watching. Source your comments, questions, or concerns down below in the comment section. Enjoy the rest of your day, and I will see you in the next one.